Hemant, thanks for having me to your office here in New York to talk about what's going on in the market, your Q2 letter, and how you see the state of venture and how it's changing.
Thanks for doing this.
To start us off, we're in mid-July right now. What's going on in the market? It's wild out there.
I walked into this year when we had this conversation with the team where we said we just have to fundamentally recalibrate what scale means, what we're really striving for. And, like the data points are when a company like NVIDIA can add $1 trillion of market cap in 100 days, or Anthropic, which, we now have a very large investment in, is adding the kind of revenue it's adding every month, billions of dollars, $10+ billion often. You sort of say, wait a minute, the scale that we're operating at and the concentration of value that's starting to happen in a handful of companies is pretty stunning. And so the corollary to that is, what are the founders of this generation supposed to be doing so that their work can actually matter? And I'll tell you, like when I first got in the business in 2000, whole goal, our first institutional fund was $200 million, and the goal was invest in some company where you own 20%, sell it for $1 billion, and return the fund.
Yep.
And unicorn, 10 years later, the word unicorn was like a measure of scale. Last decade, it was all about, can you get to decacorns? But today, when you have multiple $1, $2, $3, $4 trillion companies that are going to be 5, 6, 7, 8, 9, $10 trillion companies in a few years, building $1 billion business or a $10 billion business, I think it'd be financially interesting, but not compelling for founders to be their life's work, because people, great founders want to make a dent in the universe. And so just rethinking, what is the scale that our companies have to get to? How do we get them there in the world where there's so much momentum towards these large companies vertically integrating into every dimension, every profit pool? That to me is what the focus of the last 6 months for me has been.
Yeah. And so it seems from both, you had this fairly controversial X article that came out yesterday. And then
Was it controversial?
I think it was a little bit controversial.
Okay, I didn't
I think we can talk about it. I'll ask you the thesis and then we can go into it. But to stop playing the markup game, which I'd love for you to describe the thesis. I think it's related to what you just said, but what does it mean to stop playing the markup game? What is the markup game?
I think there's a couple of things in that. So I'll tell you, when the correction happened after COVID, the very first thing that I did, and Paul Fielding was our CFO, he and I sort of, decided we're going to do something draconian, is we marked our portfolio down by 40%.
Yep.
And our LPs told us we were the first firm to actually do that. And the reason was, we didn't want our investors thinking there's value in these companies at the valuations that were getting done in the exuberance of sort of post-COVID, that everything's going digital. That wasn't there. And the second is, as investors, you don't want your next generation investors coming and thinking, look how good an investor I am because I've got this markup.
Yep.
And so we took it down, became rational. We did it again earlier this year when Claude happened and the whole terminal value question was being asked of software companies, which is a very reasonable question. So the reason I wrote that was actually for the next generation investors to understand, just trying to get marks in the heat of the market isn't really the best way to create value or be helpful to founders.
Yeah.
And if I go back to my comment about scale and the fact that these companies need to get to be a lot bigger, you're not going to get there by bludgeoning them with equity. So the whole point there was, rather than just thinking about, because every time we go, founders raise capital, you're taking something away from them, you're taking their stock.
Yep.
Right? And so how do we get them to the promised land without having to continue to do that when things are way more capital intense? You look at infrastructure stuff, you look at resilience stuff, you need a lot more capital. The answer can't be just keep marking up stock to finance these, and we need an innovation in the industry. So my point was more, get everybody in our industry to think like entrepreneurs ourselves. I think we get complacent that we sit on a pedestal and we get to play God and say yes, no all day long and give you money. No, we need to be entrepreneurial about how do we serve these founders in a much more compelling way, given the needs are changing and given the scale they have to get to is fundamentally changing.
Yeah. I think the controversy might have come from one, I think, General Catalyst came up in an era where you could invest at a certain price, mark it back up. I think Peter Thiel is the one who famously said that the most bullish signal is when a firm marks its own position up within a certain amount of months. And so that is the environment. And then now when you're in a position where you have access to all of these different types of financing structures that you can provide to founders, it kind of came across as the thing that matters now is capital. and picking the right companies and relationships, the thing that used to matter, don't matter as much anymore. Do you view it that way?
That's not what it was meant to say. So for us, we look at our venture business. We look at ourselves as a seed firm, just like you run a seed business.
Yep.
Okay. Like there's a reason why we have 3 senior partners that built their own seed firms at the center of it, which is, hey, we really want to be seed first. So that relationship and building that trust and ownership in the beginning and navigating ambiguity is what venture is really about, right? The point though is from there, the journey that these founders now have and the capital they need and the sophistication of capital they need isn't just about growth equity.
Yeah.
And we have innovated some. We created customer value fund. We just raised for a global resilience a public vehicle to be able to take some companies out. So we're innovating, but I'm telling you, I sort of sit there and say, we're not innovating nearly enough. And so the whole point was to actually just say, hey, everybody start thinking about innovating so we have more capital innovation. And this is not about financial engineering, it's about financial innovation.
What's the difference?
Well, I think financial engineering is creating community EBITDA with rework. That's financial engineering. Financial innovation is how do you come up with structures that create this sort of AI, absorption of AI in society, just like the corporate bond market we created to finance the railroads, right? I mean, these are these sort of large national scale, global scale transformations that you go through. Innovation and finance is as much a part of it as innovation and technology. Who's going to do that if it's not our industry? We are the ones that are closest to what the needs of these founders are. And I just don't see enough of that. And I think it's because we're complacent with the markup game because we think that's good enough. And I think we're not serving these founders right if we're not pushing ourselves harder.
It is a question that I've even written about before, which is, does Blackstone become GC before GC becomes Blackstone? How do you think about who has the advantages there in working with these companies and provide it? Like, is it the person who has the financing experience with all these structures that can learn tech, or vice versa?
Look, I think there was a version of this that happened before as well, because most venture firms, including us, we were early stage venture firms, and you had these public hedge funds. They came down, starting crossover investing, and there was this whole idea of, is the market sort of reinstitutionalizing into platforms? Well, who's going to capture most of that value? Folks like us that fundamentally understand technology and where it's leading in the world, and have to go get access to more scale of capital, or people that are trying to commoditize providing capital to founders because they have scaled capital. And I think if you look at the dynamic around that in the last 10 years, I would actually argue that there's a handful of firms that have really innovated and are starting to do things at the larger scale. And the reality is, frankly, if I think about alpha that needs to be created in this world of AI with existing businesses, that's where this really applies.
Yeah.
So much more of the alpha is about taking AI, operationally innovating, and then driving abundance from a product perspective to serve your customers. Way more of it comes from that than can you actually cost cut and financial engineering. So I would say the advantages to firms like ours that kind of grew up in the era of like truly driving, building the world's most important companies, not optimizing profit. So I actually would tell you, like, I've had conversations with many of the large PE firms. They themselves don't see future in traditional PE anymore.
So how do you think about, you have these examples, right, that you call the living labs. How do you think about, to maybe take me inside one or two of them, what do you do differently than a big PE firm coming down and saying, we're going to buy companies and apply AI? Like, because you've grown up in tech, what do you do differently?
Yeah. So look, when a great founder starts a company, their ambition generally is to go change some industry.
Yep.
Okay. And our view is that when you want to transform an industry, no single company can do it. Okay. And I said this when we were deep in the healthcare work in the COVID era. And I was like, the Amazon of healthcare is not going to be a $1 trillion company. It's going to be a $1 trillion ecosystem. Okay. So our theory, for example, if I go to healthcare for a second, let's take the Summa as a living lab, which is the Akron-based system that we bought. Our belief is that if we want a proactive, affordable, accessible healthcare system, we have to turn these local institutions, these hospitals, which are poorly run, they're all teetering on bankruptcy, into AI native hospitals that are profitable, that can invest in their communities, and can drive that proactive care. Okay. Now, when I think about, okay, we have to go do that, let's go buy a hospital, and I sit down and say, what are we going to do with it? There's no company that can go in there and go accomplish that. So what's happening inside of Summa right now is we have our own AI team, Percepta, and we have, I think, 8 of our AI healthcare founders that are targeting different parts of the stack. They're all working together. And when you look at the corporate metrics that transform a hospital like that into the future version of what I think it needs to look like, they're like work being done by different companies that toggle each metric. And so you often get this operational view of this AI native hospital where all these companies are contributing, and they learn a lot from doing that at enterprise-wide scale, because there's not the inertia of, oh, we're going to do pilots and do incremental stuff and years of BA and certifications. No, we're going in there. And as long as these solutions are proven, because we don't want to be irresponsible with people's lives, which is the only kinds of companies we bring in here, we're going all the way. But we're going to go all the way as an ecosystem of companies. So I think this collaboration between founders to say we're going to together transform an industry, these living labs are necessary environments to be able to go do that in. Janus is another example. That's what we're trying to do the same thing there.
Yeah. I want to get to Janus in a second. I have a really hard-hitting two-parter here. One, when we were talking before we got going here, you told me a really interesting fact about Summa. So can you share that with us again? Because I thought that was the coolest thing ever.
Well, the 3 most interesting facts about Summa, first of all, LeBron James and Steph Curry were born there. And then Alcoholics Anonymous was actually started at Summa. And so I think it's actually, we forget these institutions that are around for 100 years. Those towns were really vibrant and they were very innovative. And just because of the tax of the way the healthcare industry developed, these companies that are still the largest employers have just become, economically diminished as businesses. But there was a lot of great legacy in these places. And so a lot of our focus is on, hey, can we take an institution like that, bring in our set of founders, and take that institution to the future in the way they should be delivering care to take care of their community.
And when you talk about the metrics, obviously it's going to be both, I'm sure, patient care-based metrics and economic metrics. What are like the 2 or 3 most important, and how have they moved?
If I was to think about just healthcare, I assume that's what you're asking?
Yeah.
So I think there's a few things. One is, because of the way the system is set up and there's no trust between insurance companies and providers, hospitals think insurance companies don't pay enough. Insurance companies think hospitals bill too much. So there's these armies stood up on both sides. There's this enormous work tax in an industry that already is like bankrupting us. First thing is, can you just make that go away and create sort of an AI-based system that just eliminates how the payments really flow? That's an example. The second thing is, the burnout of the workforces, which was already pretty bad given the EHRs and the way we digitized the industry, then got extremely bad because of COVID. So that workforce is burnt out. It's actually, in fact, the reason why healthcare is the fastest adopter of AI, because the workforce is so burnt out. We need to get them so they can get their bearings and can actually take care of the people. And we're not triaging resources. We triage a nurse capacity to put it on the sickest people, as opposed to we should have abundance around it. So that's like a really interesting and important leverage. And the third is the patient experience. How do you actually make it be that they can navigate the system and they can understand and take care of themselves proactively? Because the best hospital system should be one where the economics create the dynamics that nobody comes to it, right?
Right.
People want health. People don't want sick care. And so these levers that move these dimensions are, and again, no single company can do that. But this ecosystem of founders that we're working with together can actually go solve that problem.
That's cool. How does it work? Maybe walk us through the Janus example as well.
Look, Janus is another 100-year-old institution. It's got about $500 billion it manages. It's got 65 million retail users all over the world. And what do you think is, if you think about the world of haves and the have-nots, these retail market, the consumers don't have access to what's going on in our world. So the first thing is, can you democratize opportunity for them? Can you change the experience and increase their sophistication using AI? And that's sort of the way you're going to transform the experience of the end customer. But obviously, in order to do all that, you first have to make Janus itself AI native. So again, Percepta, our AI team, is working with them to operationalize sort of an AI-based operating system at Janus, and then we start to think about innovating so that their customers can have abundance of opportunity where they can invest. And so I think it's another example of a living lab where we can say, just like, what is the health experience consumers should have? What is the wealth experience consumers should have in this next era?
Yeah. Super. And does that feed back in? Like, does that impact the cost of capital for the businesses that you're talking about when you're going to be a capital entrepreneur? Is that feeding back in and kind of lowering their cost of capital and helping them scale as well?
Well, look, I think there's definitely flywheel effects for us because if we learn, if we have, first of all, if we have the economic leverage in asset management with a platform like this, we can actually go, scale the platform, buy more asset managers. If you think about, where's that capital going, it could actually be made available to the capital entrepreneurs in our industry. Yeah. And if those capital entrepreneurs are accessing this capital, then by default, they're giving these consumers access to our industry where so much opportunities getting created. And so I think that's very top of mind for us is in this world of concentration, how do we really diffuse opportunity and create prosperity for everybody? Because, I don't think we're going to be allowed to do it any other way by society.
I think there's something very interesting about this argument that in order to fight the concentration, you need to concentrate and then work on behalf of everybody. Is that kind of how you think about GC's role in what's going on here?
Well, I don't think we are focused on trying to concentrate. I think we're trying to create conditions for founders to become big enough. Then as an ecosystem, that is sort of the counter concentration of our architecture for innovation, so that can happen. Like, if you are trying to innovate in the space industry today, think about the kind of moat SpaceX has.
Yeah.
Do we think the space industry should be run by one company? If not, what are we doing to create conditions for founders to actually succeed and democratize that opportunity? I'm obsessed with this. Like we have to solve these problems. I really admire the folks that have created this kind of concentration. Again, we're investing in them. But part of what makes capitalism work for society is a level playing field where new companies can actually continue to emerge. I mean, that's who you back as well. And are we really making that infeasible in today's environment? And how do we really challenge that? So like, what do we need to have in terms of scale to create those conditions? That's the scale that's the criteria for where we're focused.
Yeah, you mentioned being in some of those companies. I thought one of the most interesting, as I was doing my research for this, I was listening to you were on Invest Like the Best, great conversation with Patrick. And you said something that I strongly agreed with, which was, we don't want to play the game of, it's not our game to play to invest in the model layer where they're going for AGI because we don't think the ROI is going to be there because these models are going to commoditize and that goes away. And then pretty quickly, and I respect this, you turn around and you're like, actually Anthropic is a hell of a business. What changed between that and it becoming your biggest investment?
Yeah. So I actually think the long-term view of the economic infrastructure of AI that needs to power society hasn't changed. So I would say, if you think about the continuum, you've got these frontier labs that are continuing to push the edge in what's possible, the level of intelligence. But every time there's a new model, but any one of them, there's a certain amount of workloads in society that don't need more intelligence. And I think we're probably 90% of 95% of the work that needs to be done that most people do in society, talk about the knowledge work, can be done with the models today. So I think breaking that frontier to open new frontiers in research and having a company that enables that is very important. I also think for markets where strategic autonomy matters for different countries, they're going to want to have sovereign model capabilities that enable it. So I think that's really important. But when I think about an enterprise, and you look at all the token spend and what's happening today, I can't imagine a world where it's going to be that we're standardizing on one of these. I think you're going to have, and this is why we invest in cognition, I think you want to help these companies figure out how to navigate, shard their workloads into where do we need the sophisticated frontier capabilities like Anthropic, and where is open source good enough, and what's in between, and what can we build ourselves, right? So I think you're going to have this continuum.
Yeah.
And so that infrastructure, there's a place for open source. We invested in Mistral. So we're deep believers in that ecosystem needs to exist and that this is going to exist. What I did not realize at that time was the pace with which we're going to concentrate. And then yesterday I was actually speaking at an event, and it just hit me. I'm like, of course this was going to happen. I've been talking about it for a while, saying this is the first technology where every CEO in every industry in every country is thinking about it at the same time. Well, if that's the dynamic, then every one of them is going to experiment with it at the same time. They're going to figure out their use cases at the same time. So you're going to see a unprecedented growth, and that's really what we're seeing. So, it's just, it hit the zeitgeist like no other technology before has.
It's wild to see. And I think you're probably the perfect person to be talking to about this, because it's just something that, like, if that happens, where they're kind of making the investment and the investments are getting bigger and bigger and bigger to push the frontier, but that covers less and less and less and less of the economic work, like you get diminishing returns on that. What's the economic case for like an Anthropic as they continue to go?
This is a very hard question to answer. And I can tell it's also a very hard question for Dario to answer. I'm projecting here, but the reality is, if they said we're going to be just a platform and provide this intelligence, but it gets commoditized by the open source, then, as he's been saying, unless we get to $1 trillion of revenue, we can't have the infrastructure that can power these models. So that maybe won't get him to scale.
Yep.
So what's the next step? Figure out what profit pools you want to go capture up top. And when we invested at the $60 billion valuation, the bet was that Claude was going to be their app, sort of in reverse. Usually you have a killer app and then you become a platform. They were a platform. They actually, in one of those rare cases, figured out a killer app.
Yeah.
And then they've gone and looked at, hey, should we do stuff in legal? And given his biology background, they want to do stuff in life sciences. So the challenge, I think, for these companies as they migrate to have enough profit pool to sustain and feed the beast, so to speak, so they can actually survive and provide the good that they can provide, is at odds with how a platform should behave. And I think they need to figure out where is it enough where they can then also democratize innovation in other parts. And so I can tell, the company's kind of in that, dealing with that tension real time to figure this out.
I mean, my optimistic take is that, you have, what Isomorphic is doing, what Anthropic might do in life sciences. You have what Chai Discovery is doing. You have a bunch of stuff happening there. I have no idea how you judge who wins that other than talent, but there's a lot of really good talent on every team. I just think this feels like it's going to be one of the greatest consumer surplus events in the history of the world. It's not going to go kill us. It's not going to, whatever, but you just have a lot of really smart people competing to deliver the best product, but hopefully, they compete to the point where the prices are good.
I share your optimism. At Summa, we have one of the companies we incubated was Hippocratic, which is, it's got a nurse that is 10x lower price than a human nurse, an agentic nurse. And they can change their care model with it. The fact that all these people can get care in their home that they weren't before, that's what AI is for. I think people need to touch and feel this in their daily lives so they're less scared of it, to your point.
Yeah.
And this innovation that you're describing, what is it going to do for drug discovery? Let's just talk about it. Today, just like it used to be in the movies, it has to be a blockbuster drug to be worth any company doing it.
Yeah.
Then we had Netflix. So I think you're going to start seeing, can we actually identify drugs that are profitable to make and much higher efficacy for smaller and smaller segments of populations? That'll only happen because you get AI to work. And obviously the regulatory processes will have to change for this. So it's not as simple as just AI showing up in this space. I think people underestimate that. But notwithstanding that particular complexity, I think it's going to be phenomenal. And it's going to further change that healthcare transformation, because that's not going to really be complete until we also transform pharma.
Yeah.
And every industry, you have an opportunity like this. So I share your optimism. I'm very excited about the abundance we can create. My worry is just if all this abundance is provided by a handful of companies and we're losing agency as a society, as individuals, that's not going to feel good. I don't think that's the world that any of us want to live in. So we just have to figure out, how does abundance come with also abundant opportunity for everybody?
And how do you think about it? Because I know you in this letter wrote about kind of the causes of the techlash, and I really like the framing of having AI being done to them as opposed to kind of doing it themselves. How do you think that you solve for that?
Look, I as I said, my big thing is agency. I think we're the concentration companies will say you're not going to need money and there's going to be all this abundance and it's all just going to be given to you. I wrote this piece 7 years ago where I said, what if it all comes true? And I was like, in the Valley, there were 3 experiments going on at the time: self-driving trucks, longevity, and basic income. I was like, they're all great ideas on their own. But when it all comes together, you're going to go to 5 million people that are truck drivers. It was 4 at that time. And you're going to tell them good news, bad news. You're going to live 40 years longer. Your job's being taken away. And by the way, we're going to put you on a stipend. So your dignity is being taken away.
Yeah.
I just think we almost have to think about Silicon Valley as a unified ecosystem, almost as a company, and say we're creating an offering for society. And is that the offering that people really want? And is that where they're going to be the happiest? I am at odds with the existing philosophy in the Valley of just, we're just going to go vertically integrate and do all these things. It's going to be great for people. No, people need to feel like they did it. People need to have opportunities for themselves. You can't melt all the labor in every country and take away people's work and turn it into a subscription for a handful of companies. Yeah. Americans don't want that, let alone the rest of the globe. So I think we just need to understand architecturally what transformation are we really trying to do and be intentional about it. And right now it's very focused on just getting to scale and sort of sucking up the profit pools, because that's what capitalism sort of does. But at some point you do end up having too big to fail dynamics. And I think that's sort of where we're headed a little bit in tech.
It does feel like the market has some consciousness or something where like Anthropic, I think, was just running away with it. And then the market said, we have Kimi K3 now. Americans are now cheering for Chinese open source models because they're open. And if you ask it a question about biology, it's going to answer your question about biology, whereas Anthropic's going to kick you to, a different model. It just feels like there's like this animal spirit that kind of fights against this concentration a little bit.
I think it's very real. Capital allocators have a role to play in this, right? Yep. What are the kinds of things we're seeking to actually fund? And, we're very focused on like, how does the U.S. open source ecosystem become vibrant? Europe needs its own and China needs its own, because I think sovereignty is going to matter.
Yeah.
And you also want to, one of the reasons we do a lot of work in policy is you want to see all these nation states figure out how to create their own infrastructure, because we're going to melt labor into productivity. They need to capture that productivity on their soil so that it can be reinvested back in people's prosperity, as opposed to that it's going to fly out to a company somewhere else. And so those conditions are worth understanding. So what we're building is actually resilient sort of AI infrastructure in the next 10, 20 years. So it's sort of an amazing time to be figuring this out. But
do you think it's, or when you're kind of talking to people in other countries that have, a GDP that's a fraction of what the United States is, do they have the resources to build the compute, to build the infrastructure that it requires to train their own models? Like you're a country with a GDP, call it 5% of the US's. What are you doing to kind of solve this problem?
So I was in Greece yesterday.
Yep.
And I was, sat down with the Prime Minister and talked about exactly this. So they're building their factories. They're trying to figure out, they've centralized their healthcare data so they can actually, understand how to use AI and intelligence. We walked them through some of the things we're doing here. And their immediate reaction was, hey, how can we do it? Can we do some pilots here to learn how to do that? And what are we going to do in a way so it actually gets done here? Because what is the reason entrepreneurs build great companies? Because they have empathy for the problem. So who's going to transform the healthcare experience with AI in Greece? It's going to be somebody who lives there, who's got empathy for it. So I do sort of just encouraging these nation states to say, create those conditions where you are setting up this compute infrastructure and an intelligence ecosystem so that your local entrepreneurial ecosystem can build on it is something we deeply believe in. I don't think we want to solve the world's problems out of Silicon Valley. We want to create the technologies that others can harness so that they can be resilient in their own way. And, there's some economic rent you capture, but it really does need to be that you level the playing field for entrepreneurship to be much more global. It's sort of part of our global resilience thesis, the way we've been operating and why we're so focused on investing in Europe, investing in India, investing in MENA, all the allied sort of nation states.
I mean, there's some of my favorite hard tech founders are in the GC portfolio. I wrote a piece with Jordan at Senra Systems yesterday on Alexa's introduction. He's awesome. Two of them, Anil Varanasi and Evan Beard, both have said that you kind of push them to think like just much bigger than other people that they work with. What does that look like, maybe outside of the AI context, in a hardware context? What is thinking a lot bigger for a founder at that stage?
I think it really does come down to Evan's case. He's building a great company at Centerbots. It's just like he's really ripping. But I'm like, what do you really want to do? Do you want to go win this market, or do you want to be the defining company that really shapes robotics for the world? There's no right or wrong. It's sort of all about your personal ambition. But if you want to go, because there's an opportunity, some company or some set of companies are going to shape what robotics is going to look like. And we're going to go from driving automation in our industrial settings to creating such amazing technology that factories get built around it. That'll be the future.
Yeah.
If you really want to do that, then you got to have a long-term vision you're building towards and make sure your short-term decisions are aligning with it. So just pushing, because you become so myopic. And it is such a difficult time right now because everything keeps changing around us. So you keep having to retest your assumptions. And there's so much strain on everybody on like, am I doing the right things? Am I in the most important areas? Did I miss something? Is there something else that's going to come? Because there is this inherent second mover advantage in this world right now that's just going to come sideswipe me, that you don't really get time to think about where long-term, what is this world going to look like? And so just pausing them to make the time to think about that and say, are we making the right set of choices to get there? That's a place where I generally am, trying to push them. And then we have some great conversations with both of them about this.
If we're doing this conversation, in a quarter or two, and everything's moving so fast right now, what do you think has changed the most? Or like, what is something that you believe will change the most that you disagree most with the rest of the market on?
I don't know if I disagree with the rest of the market on this or not, but the ability to scale these things and the importance of getting the public sentiment right, I think that is coming. Yeah. And spend time with folks on both sides of the aisle, and other than China, that's the one thing they agree on, that people are scared, and I think this is becoming more of a hindrance that has to navigate. I mean, think about what's happening in the U.S. Let's take U.S. for a second, right? U.S. has made a venture capital bet on infrastructure, and we have all this capital that has gone down into projects, and you know how much equity can get wiped out if these companies don't hit their timelines of developing infrastructure. And guess what's coming from the other side? There's real pressure on slowing things down because of fear. I worry about that creating a negative spiral that really hits us from a momentum standpoint. And I think most people are not taking that seriously enough, and they think they can just power through it. Some of the firms sort of engage excessively in politics to think that's the answer, but I do think it's about bringing people along. We're heavily underestimating that.
Yeah, I write and tell stories for a living, and it's so hard to figure out how to get this one right from where we are now, because I think we've gotten it so wrong so far. Where do you see AI ending up? Because I think there are these two worlds where it's a tool and where it is this thing that just does a lot of work. Where do you think we end up in short term, kind of 10 years from now? What does that look like? Yeah,
look, I think short term, medium term, long term, right? So short term, I would say it really is a tool. So my daughter she graduated and she's working at a AI company. She's building all these agents to automate things, and she's like, "Oh, I can automate my job." And so right now, it's all about we're reimagining how we do our work, and I think it's going to be longer than people think. I actually think we're gonna, just as a slight detour, like we're going to start saying somebody's going to start saying AGI is here, and it's going to rattle the markets. But the diffusion of this stuff is actually so much slower that it's going to be way longer than people think.
Yeah.
But the next several years is about humanity using it as a tool and making sure it drives productivity. Somebody said to me yesterday that there's a fine line between productivity and complacency. And so we need to learn how to actually have it drive productivity. I think medium term, we're going to start imagining new ways of driving experiences in society. So if a nurse is free, how would you take care of people fundamentally differently? That's going to lead to a whole new set of jobs around that. Or if tutoring or teaching is going to go from a 4-year college to, hey, it should just be lifelong learning. And you've got this AI tutor that does a video. That's this one theory people are experimenting with. Well, how would the education system change? So I think the second phase, which is longer than people think, is probably that. And somewhere in there, we're going to go from robotics where it is today to robotic models working, but also the supply chains becoming sophisticated to adopt it.
Yeah.
But on a long-term basis, I mean, I do worry about, do we need to have a post-work society, because all cognitive and physical things will just be done better by machines for like a large percentage of things in the world. And so my main thing is we're not going to fight it. Capital allocation eventually we'll push through the resistance. We're not going to fight it. But we need a calm environment as society to embrace this, see its benefits, appreciate our agency in it, and then imagine what life really needs to look like for the next phase. And so rather than creating this anxiety and making people afraid and sort of jamming it down people, if we can have a better conditions in which this is getting adopted, so we also have a calm society to think through these problems. That's a little bit of sort of what I think a lot about on the longer arc.
Yeah.
Can we just buy ourselves 30 calm years where we're making progress? We're letting people feel the benefits of it in terms of agency and how it changes their lives, and give us the headspace to think about the longer term issues. That to me is my dream scenario, is that maybe we can sort of mature as an ecosystem and start behaving that way.
Yeah. Who's responsible for that? Like, I think Meta's done a pretty terrible job of communicating how they use AI and fire people, and everybody's going to get tracked at work, and we're going to use that to train models and then probably fire more of you. Do CEOs have more of a role there to, take it on the chin in terms of margins? Or like, how does that actually, because I agree with that idea. How does it get into the economy?
So look, I think, there's unit of work, there's a company, and then there's ecosystems and industries is the way I think about it. And, we're going to go from this humans and software making us productive to unit of works changing into what are we doing, what are agents doing, the interplay in a new kind of an org. So the company changes. Yep. Well, when that happens, you start thinking about, how do I serve my customers differently? And first step that's going to happen is, in every industry, it's not that AI makes those markets become so much bigger. It's actually a game of which company has the right leadership and the conditions to take share from others, right? So the next 5 to 10 years are just like that reallocation of market share.
Yeah.
And that to me is all about the CEO. Do they inspire their team to say, hey, let's do more with less? So you're not creating a fear of losing your job. So, hey, we're going to create more leverage. But that leverage allows you to win share from others as opposed to not. And that leverage allows you to then innovate, to say, hey, we're going to now be on this sort of highly innovative journey as well to further take share from others. I think that's going to happen. And in fact, when I look at Janus, Ali, who runs it, is an amazing CEO. I actually think he's capable of being able to do that in that industry, and that's why we invested. It's very much a venture capital bet in some ways in that regard, because if we could create the AI transformation and then scale, we'll take share from others. Then the question is, okay, once the next generation leaders that are more AI native have been established, how's the industry going to change? Because they have these new tools. The amount of work that is, I think it's very naive when people say this stuff's going to change in 2 years or 3 years or 4 years. It's you have to go inside of these companies. We have these living labs, as I said, and I see what's really going on. It's going to be a while, for these companies to really embrace.
Yeah, just a couple last questions. You led perfectly in there. How has having the living labs changed how you're investing on the venture side?
Yeah, I mean, it's a great question. So I think it just gives you so much better appreciation for the end customers that our founders are selling into. And it also shows you what the problems are that are not being solved. So the magic really is the collaboration between our venture investing team and the leaderships of these labs and our AI transformation folks that are in these labs to say, hey, how do we reframe these problems? How do we think about it? What's missing? What needs to be built? We'll go look for founders that are working on that. And if they're not working on it, then through our creation fund, we'll actually put a team together and we'll go work on it ourselves.
Yeah.
So I think just being in that knowledge flow and being real practitioners, real builders alongside the founders, I think that's it makes the work so much more fun. And it's like so much more grounded in reality as to what's really going on. And it just gives us, where we've been able to do that successfully, it just makes us so much smarter about serving these founders or on how to guide them on like where the value really is.
Yeah.
I mean, I'll give you like one example is because we work in these labs, we've helped some of our companies design their customer contracts. Because if you have that kind of an understanding, you can actually say, this is really how you should go sell in this industry. These are the key levers and whatnot. It would take them 10 years to go develop that kind of an understanding, but we could kind of just sit with them and open up to come on that. So these become really interesting advantages to go, deal with the physics, especially in a lot of these entrenched industries that are trying to change with AI.
And I guess the flip side of the question is like, what are the challenges? Because I often think about, the very best performing venture firm is the one that picked the right company at the right time and made that the only bet in their portfolio. You talk about messy, kind of like walking around and not sprinting at everything and making that one strike. And you've chosen to do a lot of things, hoping, I guess, that they all kind of fit together. What are the challenges with that and the trade-offs that you make in doing
It's
that?
sort of interesting. It's actually, if you look at a lot of the things we're doing, and we said, okay, so many of these things, our capital entrepreneurship mindset and the products we're creating, or buying these living labs, or our AI transformation team, those are almost, think of those as unfair advantages for our founders. And we're doing those to just get smarter about what to do. But inside of investing, because I think the last 3 years have been like so fun.
Yeah.
It's just so difficult that, I think we invested in the, at least for the moment, looks like it was the right model to invest in Anthropic. We were very keen on European sovereignty. We did Mistral. We were very keen on, hey, defense is going to matter. So we did Anduril and Helsing in Europe and Rafi in India. We did Markup at the seed, might be the largest shareholder there. And so it actually was reasonably surgical and saying, who are we betting on in these different parts, as opposed to we're going to spread.
Yeah.
But I'll tell you, though, I'm not sure from a return perspective those smart things. Some firms index to all the models. And they might actually do better than the way we did. And we were very focused on, hey, especially in this AI era, who has the right set of values, who's building, because we that's a big part of our ethos. And so, and it wasn't even clear what these technologies were supposed to, so we'd like to let some time elapse too. But I think we ended up in a good spot. I think we've done really deep work in the AI services transformation. We've built some of these industry models like in healthcare and industrial and whatnot, and we got the right sort of base models and the infrastructure around it. So, I can't tell you we invested in every single thing at the right time, but when I look at the stack that we have, I feel like these companies are going to have a key role in diffusion of AI in the world.
I guess if you look out 10 years, 20 years, your retirement day, how do you judge success at GC? And is that exactly aligned with LPs? Is that, how do you think about that? If
I have a very simple metric of success for GC, that every ambitious founder says they want to start here. That's going back to the fact that I think of seed, I think about creation. There's a reason why we call our incubation fund creation. All that is about inception. We want founders to know that they should start with us. They can trust us. We have the scale of capabilities to help them build. We have the environments, with all these unfair advantages we can give them, and we are comfortable with ambiguity. And so if we could get there, and we're constantly trying to improve and work on that, but that's what we obsess with. We obsess over, at the beginning of a founder's journey is where the trust builds and the most ownership in a company builds and the influence builds. And if we continue to innovate in capital innovations, in go-to-market innovations, in policy innovations, I think we can serve them the best possible. That's the aspiration.
Yeah, it's almost like you're increasing share of wallet with these like really scarce assets that are these valuable companies.
Yeah, look, I think our industry has a zero-sum game mentality. And a lot of the AI slop that you see in social media is all directed towards, can I be top mind for founders when they're raising money? That's what that machine is. And what we're trying to focus on is the founders that we work with, and I think we get our fair share in the market. We want to grow it, but I think we have a great set of founders we work with. We want to take them all to promised land. We don't want to be we'll then triage who's on the power law and focus on that. We want to make sure everybody's life's work counts. And just because it's not on the most obvious power law curves doesn't mean that company couldn't be an at-scale enduring company if you actually helped it in certain novel ways. And so we're always looking at every company saying, how do we get it there? And so that over time, hopefully the reputation compounds where founders know that no matter what happens in terms of the journey they're going to end up being on, because nobody knows a priori.
Yeah.
That, this is a place where we will get you there if there's a path to be there.
Well, this was a ton of fun. I think the next few years are going to be a lot of fun, and you're in a fascinating seat. So thanks for the glimpse into it.
Yeah, thanks for spending time with me.
That was fun. That was great. Yeah, man. Thank you.